gold takes a sharp dive before bulls and bears battling it out around $26.50. Will the FOMC meeting spark a trend before the year ends? And what risks could shape the price action as we kick off 2025? Find out in the final episode of As Good as Gold this year. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. In the past week, gold has clearly seen a mean reversion, dropping back below $2,700. The market's gradually pricing in risk, combined with strong U.S. economic data and some concerns about the pace of rate cuts by the Fed in early 2025, have been all weighing on gold. All eyes are now on the upcoming FOMC meeting and whether we'll get any guidance on next year's rate path. And since this is the very last gold video of the year, after a quick look at the technicals and some key drivers, I really want to focus on the risks and some potential price moves gold could face in early 2025. So let's get into it. If we look at the gold against US dollar daily chart, we can see that prices have reversed. Bulls couldn't really push above the late November high of $2,720, and gold has dropped below $2,700, the 50-day moving average and the 5-day exponential moving average. Right now, it's trading around $2,650, which is also the 38.2% Fibonacci retracement level from the last month's uptrend. So if the bears keep control, we might find some support around $2,600. But if the trend reverses again, we could see selling pressure around the 50-day moving average and around $2,720. Well, with fewer major data points and events left for the year, I personally think the pullback in gold is mainly because of lower demand for hedging and adjustments in expectations for the U.S. economy and interest rates. Looking at the US, while November CPI came in as expected, the PPI showed a 3% year-on-year increase, which was way above consensus, suggesting the inflation slowdown might be stalling. Plus, strong retail sales, especially in the control group, are making markets think the Fed might slow down its rate cuts in 2025. The 10-year real interest rate briefly hit 2.12%, nearing November's high, which is putting pressure on gold bulls. And at the same time, in China, the year-end meeting set the stage for next year, focusing on boosting consumption and steady progress. The ECB, Bank of Canada, and Swiss National Bank have all wrapped up their final rate cuts for the year, and the Reserve Bank of Australia has hinted at possibly easing. With most of the key updates on fundamentals already priced in, and without major, geopolitical developments, the demand for gold as a safe haven has dropped, pushing gold prices down. So overall, with risks mostly priced in and expectations for a slower pace of rate cuts in the US, gold is facing short-term pressure. But unless tomorrow's FOMC meeting throws us a big surprise, I think gold will likely stay range-bound without forming a strong trend for now. A 25 basis point rate cut by the Fed in December is pretty much a given, with a focus on the new quarterly economic forecast and the dot plot. The market is expecting an upward revision to the median rate for the next 2 years, with the forecast for 2025 showing a 3 rate cut and 2 cuts in 2026. And if the 2025 dot plot stayed the same and Powell doesn't really hint at a possible pause in rate cuts early next year, that could be slightly positive for gold. And looking ahead, the key factors for gold in Q1 2025 would be how US-China trade relations evolve and how resilient the US economy is. Compared to the 60% tariffs Trump suggested during his campaign, he's now talking about imposing 10% tariffs on China after his inauguration. Traders see these differences in timing, path, and including China's possible retaliation as important bargaining chips in the trade talks. Let's think through 2 possible scenarios here. The first one would be if China's economy shows signs of weakness, the authorities might devalue the yuan to, cushion export shocks. But since the National People's Congress won't meet until March, fiscal measures might not kick in right away. This could reduce the buying power of China's central bank for gold. Also, if the economic outlook remains quite uncertain, demand for some physical gold from Chinese consumers might drop, limiting gold's upside to some degree. And the second scenario would be if the US exceptionalism weakens, if tariffs push up inflation and Trump's tough immigration policies hurt the labor market and consumer spending, US growth could slow. Traders might buy more gold as a hedge against an economic downturn, which would push gold prices higher. But in both scenarios, from a safe haven and de-dollarization standpoint, gold would likely benefit. So overall, I think gold still has room to rise in Q1 2025. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. Thank you all for being with me over the past year, and until 2025. Happy holidays!